My name is Nick B, and let's get into this week's futures overview, starting with the Forex Factory economic calendar. It's going to be a pretty busy week. Monday's mute on news. Tuesday, we have consumer confidence at 10 a.m. and JOLTS job openings. Tuesday as well, we have Microsoft and AMD earnings. Wednesday, ADP non-farm employment change, employment cost. We have pending home sales, federal funds rates, FOMC on Wednesday, and I believe Wednesday we have Boeing and Meta reporting for earnings. So that's going to be a really busy day. Thursday, unemployment claims at 8:30 a.m. We have the final manufacturing PMI, and then the ISM manufacturing PMI at 10 a.m. Friday, Thursday, before I move on to Friday, there's also Apple earnings. Apple earnings on Thursday and Amazon earnings on Thursday as well. Now, Friday seals the deal with non-farm payroll. 8:30 a.m. every Friday, first of the month, as we go from July into August. So it's going to be a really busy week, and we have a few things to cover. As always, let's start with ES for now. Okay, we'll be keeping it simple. So the overall trend has not really changed. I mean, we're still making higher highs, higher lows, but with this correction that we had, now would be or sounds like the ideal time for investors to kind of come back into the market and buy some of these discounted names ahead of earnings. Again, that might not be seasonally. Also, August into September sometimes drags on in seasonally into the year, and the only not fear, I guess the only problem I would have here is if we don't get out of the highs that we made last week, 55.33. If we can get above that on a yes, that'll give us room to come back up. We have a gap to fill towards 55.90, and get us above 55, really 56.30, get us above 56.30. I would most definitely be a confident buyer here, back up to 56.60, 56.60 for sure. We'll see on the smaller time frames right now. It seals the deal for us going higher towards the highs again, and we'll go based off of there. Here is an exciting area and rather a really nice buy here, especially with the fact that last week on Friday, that daily candle, you could see it's a bullish engulfing. We had more than enough buying power to get us open on the day at 54.43. And ES just had no breaks. I mean, we kind of kept going towards 5,500, closed above it, and now holding above it. So this looks pretty enticing with low risk because, again, if we, wait for the breakdown, really it's going to be at 54.30 at that point. But if 54.30 gives at any point this week, we're going to most likely begin heading towards 53.30, and that lines up perfectly on the 100-day EMA on the daily. Also a small intraday higher low. Really, if there's that much more red, much more blood, I also would assume, well, assuming is not a great strategy, but if we do eventually get a breakdown of 53.30, I mean, it's gonna have the juice to come down to 5200. It's gonna do that. But again, fundamentally also from the economic side of things seem like we're in a really good place. We're in a good place, and if we begin to get a little bit of a scare here in the market where we might continue going lower, um, I have a feeling that interest rates would help us flip it around. But in terms of macros, I mean, I don't see much more, fear going to the downside. If anything, this is probably really healthy seasonality where, the money's coming out of growth. And we clearly saw the Russell, the value sector, getting some love. Another interesting thing I picked up on last week was the inflow of gold. We had about $2.5 billion or so inflowing into gold. And as you know, gold tends to correlate with equity. So when you get a push in gold, sometimes you'll see that growth kind of pulls back a little bit. And we can pick up on that correlation when we pull up the chart on the weekly. You can't quite see it on the daily. So I figured if we're kind of in this low risk area where we do not bounce out of here because seasonally we go sideways, cool. we can lay a little more attention into gold, into the Russell. But again, ideally, this is where you want to buy. If I was smart money, when everything's kind of beat down, everyone's a little nervous from the correction. You have that low risk to the downside, and you ride it back up. The issue with that is, though, if this turns into an accumulation phase where sometimes before a run up in price, it tends to accumulate orders, find a little bit of support resistance. If this range right now we're in turns into that, then we're going to see that August seasonally will become chop. And again, that's going to reinforce us looking at names like gold, the Russell, instead of growth. But for now, this looks bullish. Again, the only thing that makes me kind of take back that bullish statement is get me below 54.30. If you break me below 54.30 this week, cool. I can assume that first we're going to go down to 5400, and again, I'd be taking aim at 53.30. But I don't think so. I think there's enough pain, there's enough kind of pain trade to the downside. We'll see. But that's really what I'm looking for on ES here. Let me break this down to the 4 hour so I could confirm also where my second lower highs are. And right here again, this is again looks like a nice accumulation phase. First higher low, I mean excuse me, first lower high, second lower high. So what we identified on the daily where 5660 seals the deal for us going higher, yes. Everything here in between, I mean, it would be just based around the fact that hey, we already got pretty beat down, and this would technically be a secondary trend. Most times after a secondary trend unfolds in the market, down to the intradays, again, it goes into a little bit of a slowdown, which is makes sense why we might go sideways a little bit, and then we get the next phase, and that's going to be the public participation phase, where we're going to probably retrace our steps back towards the lower highs, and we'll go from there. I want to be real nice and easy, especially this week. I absolutely got beat down on failing to identify, certain indicators of the market that kind of gave us way that we're going to go lower. Um, that's what happens. That's why I do my best to not really pay too close attention to news or analyst call outs out there, because it does sway a bias. So none of that this week. With that said, that's really for ES. I don't need to break this down to the 1 hour. I mean, let's do it. Honestly, you know what? Let's do it. We could break this down to the 1 hour. But then again, like right away, we get a break of 53.30, 55.33. I would be inclined to go long towards 55.60. Get me above 55.60, 55.65. I would be inclined to continue riding the train back towards 55.90. But we'll see. We'll see. That's something we'll talk, on the day to day. But big picture, again, I would say 5660. That seals the deal for more upside. And again, get me below the lows of 5430. I'm going to be looking at 5400, and the slowdown for me would be at 5330, 5300. 5330 is fair. That's about my 100-day EMA on the daily too. That's with ES. It's going over to NQ. Now I have a lot of stuff here. Let me clear this up. Okay. Before we go over it, I just want to show you guys on the weekly, also 3-year weekly. ES is still trending above its 20-day EMA. So this was a little scary. Maybe it was a little healthy, but maybe as long as we hold here on the weekly of, we got to stay above 5,500. That's what it is. We got to stay above 5,500. Maybe we see a retracement back towards the highs of this weekly candle, 56.30. And again, 56.60 for me on the intraday, that seals the deal to going higher. It makes sense because, again, if the wick on the weekly gives, where are we going to go? We're going to go to our 20-day. Where's our 20-day? 53.60. Okay, so 30 points off. I was looking at 53.30 being the target to the downside, but 53.60 will be kind of a level to keep an eye out for. With that said, same thing I'm going to do on NQ. It's a lot closer though to the weekly 20 EMA. We bounced right off of it last week, and closed above it. So we're not out of the woodworks here. Ideally, the attractive trade here is you go long, you put a stop below 18.9. Really, I would put at 18.850, and if you can, you could swing this bad boy back up. But the problem is, it's a chance thing. You have a lot of catalysts this week. You have FOMC, NFP, ISM manufacturing PMI, JOLTS job openings. You have earnings. So do you really want to run into the fire is the question I keep asking myself. A little piece of me does. I do. But again, after last week's trading, I mean, I gotta kind of be accountable for what it is that I do. So I'm not really trying to go gun ho. And again, maybe I'm wrong on that, but again, with what we're kind of looking at here, we have options. And especially now that I've identified we're kind of in that phase where we might accumulate, maybe we might recover in terms on the growth sector. I definitely have my eyes on value and gold, which we'll be going over in a moment. With that said, going back down to NQ on the daily, we're above that 20-day on the weekly, but we're right off of the 100-day on the daily. Again, same thing like ES. Get me below the session lows, which is 18,880. Get me below 18,880. I mean, you got a lot of downside. You got as much room down towards 18 to 230, 250. So we'll probably end up shorting that. In that case, be fluid like water. My first target to the downside below 18,880 would be 18,800, but really I'm looking at 700, 750. Coming down to below 18,750, we're looking at 18,500, and then below 18,500, we're going to be coming down to the wick of 18,250. 18,250 gives, okay, it's like bad news bears. I mean, something's not right where we're flushing down to 17,900, which is our 200 day on the weekly. If that breaks, well, this cycle here is over and we're breaking below a really important higher low that we made back in May when we had that initial pullback, initial call for a correction. With that said, let's look at upside. I do believe we have enough room and have enough strength to do buy up names here, especially now they're beat down into earnings and we retrace it, but it's going to be tedious. I got to break this down to the 4 hour because the only thing I see on the daily is get me above 20,000, 20,100 really. And that seals the deal for possibly coming up to the highs. I don't like those probabilities personally, but let's take a look at this on the 4 hour. Okay, so same thing like on ES, it's going through a little bit of accumulation phase. Now, are we going to get the participation on the way up here, which we can capitalize? But again, the road leads me to get me above 20,000, and I'll have a little bit of confidence dipping my toes to go long, even though ideally it's in this area. Problem is, I'm not willing to risk 18% out the gate, and that doesn't fly with me. Um, so with 20,000, 20,100 breaking, it gives way towards, again, this main level here that we just could not get above 20,170. Get me above 20,170. I do see on the intraday, it's a free ride to 20,600. Above 20,170, 20,200, which is somewhat of what we attempted last, excuse me, that was in the 19,000 area, but above 20,170, that's gonna give us juice to 20,600. I see that. But again, with kind of what I look for in terms of price action and direction, it bothers me that my only confirmation for us really going higher is 20,700 or the wick of 20,800. 20,800, then you could be like, okay, fine, yeah, we're going for the highs. You have certainty backing you there. In a macro sense, again, what was that? GC is below 2,400. Okay, and this is what I wanted to go over too. They have an inverse correlation with growth. So if GC is breaking down right now to 2,400, it's doing one of two things. It's retesting its breakouts from last week, or we're about to break down, and in turn this is going to fuel growth higher. It's going to help us out this week. That's kind of what I'm looking for. Again, the problem is, what kind of a risk do I want to take out the gate? I mean, look at this thing, it's going. Well, that's good at least. So with that said, on the intraday, on the day to day, if we're above 19,004 into tomorrow, This has way more room to come back up towards 19.8, 19.9 even. We have a little bit of a gap fill um, to fill from last week when we opened on Wednesday. We just straight shot fell off and never filled that gap up here. So we have a gap to fill here, and that looks promising. But again, to rush it here, not ready. Not ready, not yet. Let me see really quick. Also, I'm just interested. The fib tends to work pretty magically. Let's take it from the highs of 20,983 down to the lows here. Um, all right, so if we can get above 19,000, or at least 19,004, get us above 19,004, we're most likely going to be taking aim at 19,680, 19,700. Get us above 19,700, and that's where possibly the gap fill comes into play. If we're going to be buying this up, the ideal areas to do that is when it dips down to the supports, if it even does that for us. Um, Again, that's why it's very attractive to try to take a long here, but you gotta go wide. You gotta go wide. So we'll circle back to that. We'll see. Other than that, I mean, there's no point in breaking this down to the 1 hour, 15 minute, 5 minute. That doesn't matter to me at least because my confirmations are kind of really far out of range. So I'm not going to chase the market in a sense. When I chase it, I get hurt. Really quick, let me put the fib over on ES as well. Just want to take a look at if we go from 57.21 down to the lows, what does that give us? All right, so we're getting above 23.6. ES is a little bit in the lead. Above 55.42 gives us room to come up to 55.76. Above 55.76, we're definitely going for this gap fill from last week, Wednesday, up to 61.8, which is 5600, 5610. Cool. Okay, so we have targets identified, and the more I'm looking at this, the more I kind of want to go along, but we're not done here. Let's take a look at GC, and GC was breaking down. Okay, so with GC, the first thing I wanted to take a look at was, oops, the weekly. The daily wasn't showing me enough of a correlation with equities because on the weekly, we can see that gold is right at its top of 2450. If we are to get above 2450, we're going to come up on 2488. And I really do see 2500 as a possible target, 25, 2510, 2525. If we end up going that way, it's one of two things. If we do it aggressively, there is a chance that growth and tech might still falter behind. They might chop, they might slow down, they might go lower, might. But if GC does kind of tend to pull back right now, and this is very volatile, we were breaking below 2400, that could give us way back down to 2350, but that's a stretch. That's a stretch with where we are. Ideally, I'm not saying it's a one-to-one correlation here either, where GC is going to go higher and tech is going to go lower, but it depends how aggressive this unfolds. With that said, if I see that growth is chopping, I'm going to take a look at GC if we are breaking out. And again, on the weekly, we're holding our ways. What this looks like to me is it's about to be distribution time because you had accumulation here, you had the participation here. Now you're slowing down in a channel where it's going to figure out what it wants to do. And if it wants to come back down, come back lower, I think in this moment seasonally, it should help growth head a little bit higher. But if GC decides to say, nope, we're breaking out, we're going to go higher, there is a slight chance we see that pullback just because there's that inverse correlation. At the same time, though, looking at GC on the daily, looking at NQ and ES on the daily, in a sense, they're both kind of along the lines on the same trend, and that also have to take into account that it makes sense because as kind of asset prices go up, you'd expect that gold, God's currency, would follow through with that. And then when, it starts to get a little risky, you start seeing fear in the market, you'd see the money kind of alternate out of equities and into something safer where it might retain its value or it might go up higher as equities take a spill. But again, most of the spill that we've seen this last week, the worst of it, I want to say it's over. So moving forward with GC, ideally, if we get above 24.88, put a stop at 24.50 and you're targeting 2500, 2525, 2550. Um, let's take a look at this on the 4 hour as well. Yep, you got a gap to fill here, though. That may or may not unfold as long as we hold a support here of 24.32. That's going to be our lower high. Wow, we had a perfect retest of this wick here, and now we're pushing for it higher. Um, Technically, there should be no slowdown for us above 24.50. We're going to aim straight for 24.72. Above that, we're already going to be eyeing 24.88 for more upside. Now, in order for us to go lower, with this gap fill would have to initiate really a break below 2400. Yeah, that's what do it. Below 2400, we're gonna be coming down towards 2360, 2370 as first support fill this gap, and then as long as gold really in this range stays above 2350, we should be all right. If 2350 starts breaking down, maybe we see a faster acceleration growth. With that said, that's all for GC. Again, not a name I touch too often. It's pretty wild. The spreads are pretty wide sometimes, but it could be lucrative if we do it right within the cycle. If growth starts to slow down, it could be just what we need. Moving on to value, last but not least, Russell. All right, let me clear this up. All right, 2021 highs, 2460, and we are just beginning. What a beautiful open for Russell. We're at 2287, approaching the last lower high of 2290. Get us above 2290, and most likely, especially with the seasonality, I think this is going to be the winner of the week, where we end up heading towards 23. I want to say it was 2345 I had mapped out. First, the highs of 2300, but 2345. Let me zoom in a little bit more. Is this candle wick right here? Um, for me, it's a particular interest, a target, because why was this the last area we kind of tested, and then Russell just absolutely nuked to the downside, and we haven't seen these levels in a while, since 2021. So finally, we're approaching them. Get me above this wick of 2345. We have all this room to come up towards 2400, and then from 2400, just because it's that round psychological number, we can definitely be taking a look at 2460. Above 2460, really, I'll already be eyeing 2500. Um, with that said, I mean, that's all we're all she wrote, all we're looking for. Let me check this on the 4 hour. Yeah, this is just a beautiful breakout that's about to unfold. Now, ideally, I need the daily candle. If we want to see this continue, we need the daily candle to stay above 2304 if and when we get there. If we can't, if we fail to get above these highs here, Russell will not go any higher. But again, it's been quite the little bull for us the last week or two. Um, and this is now either going to be distribution where we might see some selling, or this is going to be a continuation of the Russell and the value sector, these beat down names finally gaining some traction into this bull cycle that we're in. With that said, let me take a look at VIX as well. I know it's closed. Where did we close last week? 1639. That's nice. Okay. So we had a bit of a spike. That's what ideally flushed us down towards the session lows that we experienced last week. But right here in 1936, couldn't get above it, couldn't get to the $20 level. And here's what's interesting. Last time we were at 20, which we also couldn't hold, we briefly held it. This was from the geopolitical issues with Iran and Israel. And that was also around the time of March, April, May when we were experiencing the pullback. Maybe this is on a smaller scale. This was a nice rejection. Again, we couldn't even get to 20. So maybe this is a good sign where the market got a healthy breather and this is why we're also seeing this buying out the gate. They're buying NQ, we're buying ES, we're buying the Russell right now. They're all green. So 5509. Let me see where's NQ. 235. Beautiful, beautiful. All right, so I'm definitely feeling bullish on the week. I think the worst of it is over, but I won't be ignorant to the fact that if the session lows break, hey, just gotta suck it up and short it to the next higher low. Be liquid like water, no biases. With that said, I hope you have a solid trading week ahead, and I'll catch you on the next overview.